The lower time frames, especially the 1 minute time frame and below, are perhaps the very factors that drew us into trading in the first place. We've all seen those YouTube traders diving into the M1 time frame, pulling off unbelievable scalps with these crazy risk to reward ratios. We've all been captivated by the dream of perfectly timing the market, nailing the tops and bottoms. But when we tried to implement or replicate what we saw, frustration met us heads on. A constant battle. We started to doubt everything we were seeing. Frustration took over, dragging us into an emotional spiral that cost us dearly. Revenge trading, live account losses, or for some of us, challenge accounts blown. We've been through all of it. In this video, I want to discuss the role lower timeframes play in the failures and losses of most traders, but also, for a select few, how mastering these timeframes proves that success is possible. Let me begin with a reference to a famous play by Shakespeare, Name As You Like It. In it, we are invited to step outside and gaze at the sky. What do you see? Shakespeare asks, and immediately answers, As you like it. As you please. The clouds might look like a lion ambushing its prey, a horse, or even a wise old grandfather smiling at us. Yes, as you please. This isn't just an optical illusion, but a neurological cognitive trick our minds play. And this phenomenon is present in many aspects of life, especially and most notably in trading. Do you see what I mean? We are all trading imaginary markets. There is what we think the market is saying, and then there is what's actually happening. The deeper we go into lower time frames, the more the so-called noise intensifies. You must have recently heard terms like SMC trap, or saw traders saying things like, it didn't respect my FVG, I see manual intervention, it should respect that array. These traders imagine scenarios and get frustrated when reality doesn't match their expectations. For me, that's the essence of the lower timeframes. They make us imagine hope and fear. We see sharp moves triggering FOMO. We see slow, choppy markets creating boredom. We see levels touched multiple times, fueling support and resistance ideas. We see patterns. We see trend lines, triangles, dragons, whatever. So the question that we might ask, should the M1 be avoided? The answer is it depends. For beginners, I would strongly recommend avoiding the lower timeframes and staying above the 15 minutes. But for experienced traders, and I assume many viewers here fall into this category, I actually encourage embracing the 1 minute time frame and understanding its story. The 1 minute chart is the kingdom of frustration. It reveals the psychological underpinnings of the markets, and that's why we should engage with it. As I often say, when they are frustrated, I'm having fun. For me, the 1 minute time frame is critical because it's where I make my moves. It's where I add or reduce my position. I scale in and I scale out. What I look for is frustration signature. I won't dive into technical parameters in this video, but think about the models you know. Consider how they often appear to be setting up only to reveal themselves as traps. So can we conquer the 1 minute time frame? I believe we can, and it's largely a mix of technical skill and some intuition. But before we discuss position building and execution, let's address a crucial mindset. How can we maintain patience and peace of mind when trading the M1 timeframe? Here's the question I want to leave you with as a food for thoughts. Whenever you approach the M1, ask yourself, what will frustrate the most? Again, what will frustrate the most? And I'll end this video with a legendary tweet from Tom. And Tom writes, my philosophy when trading is simple. When I'm taking a position, I ask myself, how surprised will I be if this stops me out? If the answer is anything less than very fucking surprised, I don't take the trade. To be continued.